Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea, and we say good morning to all of you. It's been a fabulous week, endless strong conversations, hard to pick two each day. John Stoltzfus on fire today. We've had in a series of people who said courage in early April, and they've looked to be right. John Stoltzfus leading the way there with aggressive calls on the Standard & Poor's 500. And what John Stoltzfus emphasized to us is the private investor has changed. They've gone from cocktail chat to their retirement study.
The private investor today is investing very differently from the way they did when I got into this business 42 years ago. 42 years ago, private investors were called the retail investor, and it was cocktail party stocks for most people. Some people did invest seriously my aunt, for example, was a serious investor. And so that's where I come from, But when we look at the environment today, you've got the private investor is looking towards their retirement or in retirement is
right.
Considered for the boomers.
Okay.
My gosh, we've got longevity here. You've got to prepare for it.
John Stoltzfus there of OPCO, joining us on a path to retirement next week after many years of commitment to Wells Fargo. Jay Bryson will retire. We had a good conversation with their head of global economics, Jay Bryson, on a changing America.
The quality of the data, I think, has always been pretty good. I don't think that's the big change. I think the big change over the last 3 or 4 decades is just the overall structure of the economy. I was talking to somebody about this yesterday, and we were talking about, if you go back to the oil shocks of the 1970s, right? If you were an economist in 1975 and you were Rip Van Winkle and you went asleep for the next, 30 years or something like that, and you saw the inflation of say 2022, you would look at that and you say, oh my God, we're set for a decade of higher inflation. Well, the structure of the economy's changed. Back in the 70s, you had much more union power. People had wage indexation. And so when you had those inflationary shocks, it immediately fed in, it caused an upward wage price spiral. You don't have that today. And so, again, I think we economists have to be mindful of how the underlying structure of the economy is changing. It's always good to look back at history. You can get lessons from history, but you have to be mindful how the economy has evolved over time. And the U.S. economy, it's evolution it's glacial, but it's happening all the time.
Jay Bryson of Wells Fargo, and I would editorialize there, having lived a fair amount of that, is the great certitude, the cockiness, if you will, of so much punditry on Wall Street leads you, after you're wrong the first time, the second time, the third time, to an inbred humility. You hear that from Dr. Bryson, and I hope from a huge part of the guests that we have on surveillance. One of the great humbling experiments was the revolution of technology and innovation in petroleum products. Nobody saw that coming, and it was something when fracking showed up. We're out across the nation every morning. Thank you so much for listening on your commute, and on YouTube. Subscribe to Bloomberg Podcasts, and on Apple Podcasts, Spotify, Amazon as well, and on YouTube Podcasts. This is Single Best Idea.